What's going on, guys? Welcome back to another trade recap video. Still down here in Florida. This is my last day on vacation. So we're going to do a trade recap here for you. So as you can see, ticker symbols traded are down there on the bottom left. Today I traded, I made a profit of $7,400 green, spent $133 in commission trading, spent like another 700 bucks on short locate fees. So overall, probably about a $6,300 a day green here, but overall traded to a total of 7,400 profit from actual trading positions. So we traded CLPS, AMTX, BCRX, SCYX, OCC, MTC, obln. Didn't actually trade MGI. That was an accidental fat finger. If I don't fat finger at least one position on the day, then it's not a legit true trading day. So that was a fat finger. So really didn't trade MGI. So far from trading today, it's been 100% accuracy across all of my positions. Didn't lose any trades. So that's always a bonus when you're trading at 100% accuracy. That lets me know that my trading approach is consistent, it works, it's accurate, and it's to be followed. So let's get into going over these trades. We'll just go top to bottom, starting with CLPS. So if you look at CLPS, what we started doing, it was a short position. Pretty much everything we did today was short positions. So CLPS pre-market kind of runs up. We don't do any trading here. Ended up squeezing up before the open and into the open. Our short targets were pretty much this red line, 460 and anything above. So I think I built a position of maybe a couple thousand shares. Maybe it was like 5,000 shares. I actually really don't even remember. But started shorting CLPS. Going into the open and all the candles going up until we broke down and covered the position into this low. So if I zoom in, we started shorting this red candle, we shorted this green candle, and this red candle. So pretty much shorted this whole entire move up until it broke down, and then we covered the position here. Okay, and then the reason for shorting is if you look at the right side of my screen, you're going to see that CLPS had reached its long-term trending resistance. So I'll show you kind of how we would go about doing this. So I always run multiple charts on another monitor, but you'll see that if we were to look, this is the 4-hour, 180-day 4-hour time frame, super popular time frame for me. You're going to see that blue line's right there at 516. So that's how we got the line there at 516. You can see it stopped at 519. If we went to the daily chart, we pull up the daily chart, you'll see that the daily chart level is 504. So we knew that pretty much going up to this 504 to 519 was a fantastic shorting level. So we were basically just selling short into this move. And then part of the reason that it fell down so sharply, remember this is very important. The reason that CLPS fell down so shortly, and it doesn't have to be this way always, but just always remember this, and you'll be able to have more of a concrete understanding of what can happen. And the market moves in a reciprocal fashion. So if it goes up fast, it usually comes down fast. If it goes up slow, then it comes down slow. Or if it it sells off slower, then the bounce will typically be a grind back up slower. If the stock goes crashing down really fast and really hard, then the bounce will usually be quicker and faster. And the reason you want to know that is so that you are you're not questioning, kind of the flow of the stock when you're in a position, right? CLPS went up really fast, so when we were shorting, we expected it could come down really fast. Okay, so you're putting yourself in, you're giving yourself reasonable expectations, right? You're not shorting a stock and thinking that it's going to take, 3 seconds to go down, even though, so if a stock goes up really slow and then you go short, right, don't expect it to come down really fast if it took, 7 hours to get up, right? Usually if it takes 7 hours to get up, it might take a couple hours to come down. So it's making sure that your expectations are in line with the market so there's less questioning. All right, so CLPS, great trade, short on the top, cover. Next one is AMTX. AMTX was a trade pre-market. Essentially, stock blew up here pre-market. Instead of going long, we just waited for it to get overbought as usual and then just shorted the top of the stock this morning pre-market. What were the reasons for shorting, where we were shorting? If you look at the right side of the screen, and I'll redo all the drawings for you here in this video so you guys get a better understanding. So if you look at the right screen, follow my cursor, and then look at the left screen, or it might be the right screen. I don't know, wherever the red, look at the 1 minute chart. Ready? So I'm gonna put the line there. See where that red line comes in? So we knew that as soon as the stock started to get into the prices of this red line, It was more of a low risk trade to bet bearish. So again, we use a 4-hour time frame to identify long-term resistance marks, and then as the stock would run up to it intraday, we would take a position, bet bearishly against that market, and then so ended up going short. I think it was like a 5,000 share position, maybe it was 2,000 or 3,000. No, it wasn't a 5,000 because at $317 green, it would be more than that. So I think it was maybe like short 2,000 or 2,500. Again, I don't even remember. I do so much trading throughout the day that I basically forget the share count that I'm even using a lot of the time. So anyways, went short a couple thousand shares here, top of pre-market. Covered most of it into this drop because I think this was my first trade on the day. So just trying to get some green under my belt. I haven't been trading for a couple days as I've been on vacation. So I was just kind of trying to get back into the rhythm. So short a couple thousand, drops out, make a little bit of money, close out the trade. But the reason we did that trade is because it just blew up pre-market and just ran into long-term resistance. All right. Next one is BCRX. Now BCRX was an intentional trade. It was only $24. But anyways, so BCRX was just running up today. It was really light on the volume. I caught it a little bit late, but I basically started shorting this candle, but I only went short like a couple hundred shares or something like that because I knew I was catching it late. So I didn't want to elevate my risk by taking a big position. So I just kept it a couple hundred shares. And, excuse me, at the time, it was only trading, like minimal volume. I don't even know. It really wasn't trading that high a volume. I was trading like maybe 15,000 shares per 1 minute or whatever. So, pretty thinly traded. You can't do a big position. So I knew just to go a couple hundred shares, look for a really small win or just something to take home with you because volume was really thin, volume was really light, but it still provided an opportunity for a bearish move that we could profit on. So I just went short a couple hundred shares, and as soon as I went green, I took it off, and so it made $24. So I was happy with that. $24 is like a burger and 2 beers, so you're good. All right, SCYX, next trader, $222 green. So SCYX was a trade that was overbought pre-market, so let's talk about this. All right, so if you look at the screen on the right, you're going to see I'll redo this. All right, so I'm going to draw so again, look at the right screen where my cursor's at, then look at the left screen or the 1 minute chart. All right, boom. So our red line comes in, bats our resistance. So as soon as SCYX got into the prices up here, I started shorting. I accumulated a position of like 1,300 shares. As soon as it dropped down, I took a little bit off, and then I held just a couple hundred shares and faded out this move and covered the rest here. So started short here, took most off on this candle, covered the last bit on this drop, and it was done with it throughout the day. It resulted in $222, but the main reason was, if you look at the screen on the right, we knew that it was running into long-term trending resistance at the price of $11.12. So as the price was going up to $11.12 for the first time, it made sense to be more of a bearish trader there, which was able to profit, $222. Next stock is OCC. OCC was fun. It was a small little trade. So again, if you look at the screen on the right, you're going to see that we'll redo this. So look at the screen on the right. I'm going to put my line here. Look at the screen on the left, 1 minute chart. Boom, all the way on the top. So we knew that OCC was running into prices of 430. Anything over kind of in this zone for the first time made sense to bet bearishly. So we started going short OCC here. Only took a couple hundred shares. It wasn't, it was just kind of one where you're like, it was kind of questionable. I was like, maybe it goes up to like 5 or 6. So I was like, I'll just take I think I took like 500 shares short or something like that, or fairly small for me. So I went up short 500 shares as we're running into long-term resistance, as you can see displayed by this right chart. And as we kind of swept down, it halted here, and then we covered after it unhalted into this drop. So short here, cover down there, close out the trade for $233. And a lot of our trading group actually got in the same trade, or it was actually $138, sorry. But a lot of our trading members were in on that trade, so that was fun. MTC, another good trade. So this was another short trade. If you look, we'll pretty much go through the same process as we've been doing here on this trade recap. So we'll look at the screen on the right. You see that blue line there, boom, boom, bing. We're going to put, again, our level there. Watch the 1 minute chart. Price comes in right there at 339. So we knew that as the price of MTC was running up to 339, it made sense to be bearish. So this one I went short 5,000 shares, started shorting in the top here, and then pretty much as soon as it started to come down, I pretty much just covered into this whole way. And I think I exited right here. That was my last cover point. So short MTC, I didn't get short here, was actually short in this red candle because by the time I got there, did my full analysis and realized that I wanted to be bearish, we were down here. So I started shorting into this red candle. So I caught it a little late. So my risk was elevated. So I took the short off a little bit sooner. But if I was short at 539, I would have felt more comfortable holding a longer fade. But since my entry and my average, it wasn't spectacular, but it was still good, but it wasn't spectacular. I knew that my risk had been elevated slightly so that it made sense to be a little bit more cautionary trading on it. So went short 5,000, covered as soon as we dropped a bit, held some, covered more, netted a profit of 833 on that stock. But again, main point was we were running into long-term trending resistance for the first time. Don't go long, bet bearish. All right, next one on the list is obln. This is my biggest winner of the day. This one was challenging. This one took a while to work. Could have done better. But what we did was started shorting 1,000 shares here with the anticipation it could go to here. So this was a situation where, and I got to give you some background detail on this so you guys really understand kind of what's going on. So look at the screen on the right. We're going to delete all these drawings, but this was a cool one. This one made $5,000. So like that was what really set my day into like a big day, was obln. So if you look at obln, it recently went through this big jump to like $10 and then it crashed and then it bounced. So this is just normal functional trading here. This is normally what the markets do a lot of times. So penny stock will blow up, crash, bounce, fail to bounce, fade back down. So if in the event you woke up today, you're watching obln, you're like, oh my God, it's moving, it's ripping, yeah. This is just a relief bounce day. So this is a day where everybody who's been short from like 10 and 9 faded it out to 5. They're just covering their positions on this day, and the market maker is squeezing them up. So the market maker is essentially squeezing them up and causing them to squeeze up. And as the stock stops squeezing for the day, then it will return back into the trend and into the short. So essentially, big long day, everyone shorts, stock crashes, they cover, stock bounces, then we reshort the top of the bounce day. So we started shorting pre-market just 1,000 shares here. And the reason we only shorted 1,000 was because we said this could be the top, but it's also very likely that it's not the top. So it could be the top, but very likely it's not. So we're only going to go 1,000 shares. So that way, if it does drop out, we're going to make a good win. But if it does go up, it's not going to kill us. And so we went short here, 1,000 shares, with the anticipation it could go as high as about 750. So we went short 1,000 here to catch a nice drop, but only 1,000, so that if it went to our 750 price target, we weren't underwater too much, and then we would do a big short position, because the 750, 720, pretty much the 720 to 750 was our big shorting location zone. So we really wanted it at 750, 720 the whole entire time. So even when we were shorting around 650, we really wanted it at 750 and 720. But sometimes you just don't know. So you got to position yourself for the unknown, right? So we don't know if it's going to go to 750 for sure. We don't know if it's going to drop from 650 for sure. So let's put ourselves in a ping pong position, right? So we're like a ping pong ball. We don't really care which way we go. Either one will work. But if you position yourself for the ping pong ball to only go one direction, but then it goes the opposite, then you're fucked. So position yourself small enough that we would create a good win, with the hope and the anticipation we'd actually go up and lose money first so that we could enter into a better selling zone. This one's a little bit different. This is something that a lot of people, it's a little bit different of analysis that we typically do. So anyways, let me talk about the position. So anyways, went short 1,000, pretty much shorted a couple more thousand. I was in like 8,000 shares short here, went up more. I was down about $3,000, shorted up to 10,000, and then the move finally broke and faded out. And then I ended up covering the full position right here. So into this bottom, so I had 10,000 shares short up here, and then faded the move all the way down to here and started covering. And then shortly after, the market popped a little bit, but this was me right there, covering into this low. So short 1,000, short a couple thousand, short a couple thousand, up to 10,000. Market finally fails, breaks down. I start covering into this low here of the 10,000 shares to get a win of 5,000. So again, the best way to simply put it is that it's like this. whenever a stock goes big and then it crashes, it's going to have a relief bounce day. The relief bounce day will 9 times out of 10 get sold into, and it creates a great shorting opportunity on that day. After the long is done, the short will come in. But how do you pick the price targets to short at? Well, for this one, at the time, this blue line was like right here. So we knew that intraday, the stock was overbought at the 750s. And then also by using a 5-day chart, which isn't something that we get to do a whole lot of the time, but a 5-day, 5-minute chart is going to be great for doing an analysis on a penny stock that's squeezed up and crashed down, because then it gives you kind of the statistical average that it could bounce back to. So think about it like this. obln breaks up, has like couple crazy days. Usually we're going to use a 5-day chart to look at what's happened over the course of its big move and its big crash and its bounce day to project where the top of the bounce will be. So you can see that the top of this trend came in play at like 720. So that's how we picked the 720. And then also on the intraday chart, the intraday resistance was about 7. So we knew from anywhere from like 720 to 750 was going to be a selling zone. So as long as we averaged our position okay and kind of managed it properly, we should accumulate a position to the 720, 750s where most of the sellers are going to be located. And as soon as the buyers get weak hands, it's going to sell down. This is something else I'm going to mention here, which is very important, but don't take it in the wrong way, anybody. This is not shit talking here, but at the time of us trading short bias on obln pre-market and into the open, we were made aware that even Ross Cameron was going long into obln at the same time, which is okay. That's the thing, is when it comes to the market, there's so many participants that you don't entirely know what everyone's doing and what they're all trying to do at the same time. But this is an important topic that we always teach, is that you need buyers in order to create selling pressure, and you need sellers in order to create buying pressure. So, as Ross Cameron was buying up into this move, we know Ross trades big size, and we know that he has a big following base that can follow him into trade. So we know that the more people buying up a move means there's more people holding positions on the long side, maybe at these high prices. And as soon as those long bias traders stop out, they're going to create a big selling wave on the downside. So that's the concept, is you need buyers to create sellers, right? And you need sellers to create buying. So when you have a bunch of people buying something up, it's just a matter of time before those buyers start selling their position, and they're going to cause a down move. So, we kind of knew Ross was trading into this, and that's not the reason we were trading it. I just started to happen to trade obln bearish, and then someone's like, hey, Ross is trading it, be careful. And whenever I hear that, I think, perfect, everyone's buying this up. Eventually you're going to have a bunch of people selling it too. So it's a matter of timing. And so that's another interesting thing I just wanted to bring to your attention, is that do notate that you need a bunch of people buying to create a bunch of selling, and you need a bunch of people selling short to create a bunch of buying. So that being said, hope you guys like the trade recap, and I will see you guys on the next video. Everybody, take care.